Hey, what's up, everyone? Welcome back to Day Trade with Tony. And we've been day trading today, and it's been a wild old day. I'll give you that much. So, Day Trade with Tony, we're all about day trading the stock market, the US stock market, equity, so stocks and shares. And today we've had a slightly green day, just over $500 profit on the main account, and we've actually had more profit on the small account today than we did on the main account. However, that being said, I'm taking today as an absolute win. Why? I kind of muscle memory kicked in. We traded three stocks today. So we traded Intel, which is I don't think needs much introduction. The computer chip manufacturers. We lost $325 on that. We actually lost a little bit more than we recouped that. And then we traded LUNR is the ticker. The company is called Intuitive Machines. Now, this moved up huge amounts today. It started off around $40 and it moved up to $135. So we're talking kind of over 200%, 230% gains, I think it was at one stage. Huge moves today. And Muggins here only managed to make $1,300 on this. So why? Because I lost $40,000. I'm laughing because I made back over $40,000. So we went $40,000 down trading this, and the reason for that was quite simple: is that muscle memory kicked in, and my kind of standard entry. I'm used to trading the lower price stocks, which anywhere between kind of $5 and $25 is kind of my sweet spot. So for me to take an entry starting position, an entry position of like 2,500 shares. Is not uncommon. 2,500 shares of a $20 stock is $50,000. I've got an account that can cover that in equity, plus the margin on top of that. Not a problem. If I need to dig myself out of a hole, I can dig myself out of a hole. If I find that the stock's going well for me, I can scale up and take a bigger size. So 2,500 shares is not usually a big problem for me. It's normally my starter. My starter entry or my starter position in terms of share size. So muscle memory kicked in. Intuitive Machines was moving up and moving up huge. So I decided to take a position and I went in with my normal size. Now, when I went in with my normal size, the spreads were about 60 cents. So I knew straight away that I was going to be, a little over $1,000 in the hole. It was almost $2,000, and that didn't bother me. So 60 cents quickly became $3, and that $3 quickly became $5. So the spreads were just huge. It was, so range. I was trading it at one stage today with $7 as the spread, which is just. It's mind-blowing. Stock with a $7 spread, but we were looking like $13 and $15 range at one stage. The average true range on the 1 minute chart was like, I think, $12 or $13. So the range was covering the spreads, but initially a couple of things happened. I got in and I kind of got spooked out because I went in too big. There's no excuse for it. I went in too big, not expecting the spreads to be as rangy as they were, and then when it started to retrace, I found myself in the hole to over $10,000. So I cut my position, ended up finishing, I think, about $14,000 down. So now I thought, okay, I need to adjust a little bit. And I went back in for a move back up, but the spreads were already like $2.50, $3. Huge spreads, like I say. So for it to move and to get me profitable, it moved up, but the bid didn't get me into a profitable situation. So whilst it moved up, when it pulled back, I found myself in a negative situation again, and I ended up putting it for a loss. So 3 times in a row, I actually got out of the position for a loss, and then I thought, okay, I was a little bit despondent at this stage. It's about $40,000 in the hole at this stage, because I was kind of thinking I need to give it a little bit more risk because the spreads are so wide, the range is so big, the opportunity was there. I knew this was taking off. I could see it was taking off, and I just got my timing wrong. I just traded it poorly because I went in big size, oversized. I wouldn't say big size. 2,500 shares is not what I would call big size, but it's oversized. When I look at the size of the spreads, the price of the stock, which is in the kind of $50 mark, and when it starts to pull back, I'm confident that it's going to move. So I'm kind of thinking I'll go in again. I'll try again. This is going to break out. It's setting up well for a nice break, and it did. And did it. So I was about $40,000 in the hole, and at this time the red mist descended, and that's never a good sign. When the red mist descended, I'm like kind of thinking the old poker analogy when you're short stacked and you're in a situation where you've got a really good hand, got great cards, you might have kings, pocket kings, and you're short stacked. So what do? You go all in. You're either folding it or you're going all in. So I've got kings. I know if someone's got aces, or if an ace hits the board, I have a chance that it can go against me, and I could lose. But the odds are in my favour. Kings are a good hand. The way this was setting up, I thought the odds are in my favour. I'm going to go in, and it's all in a fold. Worst case scenario is I've got a 6-figure account. I was $40,000 in the hole. What's the worst that could happen? I could lose $100,000. I'm playing with the house's money anyway. I made over $1 million last year, so I'm playing with the house's money anyway. That's not the right way to do it. Do not do that, guys. Do not do that, guys. That's the wrong way to think of it. But the way I was thinking of it, it was the red mist descended, and I thought, okay, it's all in a fold. So I went all in, and I went in for another 2,000 shares, and then I doubled down. And when I doubled down, funnily enough, it did pull back, and it looked like I was going to be in a bit of a tough situation, but it held, and it went, and it took off, and it moved. Just see, it moved about from my entry 54.74 or whatever it was to when I was able to take profits. I got $6. Less the spread, so I got a good $4 move on a 2.5, or actually on a 5,000 share position, because I doubled down at 2,500 shares, and I added another 2,500 shares. It was way too big to be trading this stock with 5,000 shares, way too big. But it took off, and I got a good $5 move out of that, and I was $40,000 down, and they ended up, by the time I came out of that position, I was like $7,000 down. So I thought, okay, I'm going to carry on trading this. There's an opportunity here. So volatile, and that's what we want, volatility. Now, granted, it wasn't the highest volume stock to trade, and I'm always saying the two main things you need are volume and volatility. This didn't have the volume. It had good relative volume. It didn't have huge volume like I normally trade. We're not talking kind of hundreds of thousands of shares per minute, but it had good relative volume. So from what it normally trades on any given day, it was high volume. So that's one thing that I look for. But the volatility was huge. The opportunity here was huge. It went from about $38 on the day up to over $135 on the day. So I think it finished yesterday at $38, just around the $38 mark. It went up to over $135. So yes, there was opportunity to trade this, and I managed to trade it. So I was able to trade a large portion of that. We got a nice bull flag set up, and I traded the bull flag, and then I missed the breakout, and I was kind of kicking myself because the breakout went another like $15, $20. And it was one of those that if I traded it right, I could be sat here talking to you now, $150,000, $160,000 in profit. I didn't trade it right, so I'm sat here now talking to you with $500 in profit on the day on the main account. So look, from being $40,000 down to being almost $1,400 up on this particular stock, that's a win in my book. I'll show you how I got into the hole, and I'll show you how I got out of it. That's probably the best way of doing it, and a couple of bits and pieces behind it. But when stocks like this move, we've seen a few stocks like this move, and they're a bit scary. They're extremely scary to trade. But the opportunity, if you trade them right, if you get it right, the opportunity is huge. We saw it last year with HKD, with Huadi, with AMV. I got AMV, I got HKD, I got a portion of HKD, and I got a portion of AMV. I got stung with Huadi, but some of these stocks, they move so big. The volatility is so huge. The spreads are huge. So you need to change your mindset. The risk reward strategy that you normally look for with stocks of any price, you need to kind of stretch that out. You're dealing with stocks that are 2, 3, 4. This is categorically, this is the widest spreads on a stock I've ever traded, and it made me nervous. So once I got to kind of within $7,000 of getting green again, I scaled down, and I was like, no, okay, I'm not going in with 2,000 shares or 1,000 shares. I'm going in 500 shares. I scaled up to 1,000 shares once I was in a position of strength, well, a relative position of strength with this stock, but that was kind of the max size that I was prepared to deal with. It was just a huge. You can watch the summary replay a little bit later. But let's go through what we're talking about here, shall we? Okay, so as you see, the dotted line here is yesterday's closing price. So this wasn't on the scanners as a gap, a pre-market or potential gap and go. It was something that it did make some big moves a couple of days ago. I think early last week, the end of last week, Thursday or Friday last week, made some big moves. Went from kind of $14, $15 up to $50, and then retraced a little bit, and it just consolidated sideways. So right now, it closed on yesterday at just around $38. As you can see, just under $38. So it came into the open pretty much where it was at. Nobody trading it overnight, very little volume, so it wasn't on the scanners at all. And then it started to make it's slowly and steady made its way up, and then it just kind of went parabolic here into a halt. When it got into a halt, this is when I took notice. I'm watching this for a halt, for a resumption. It made a resumption, then it started to make a continued move up, and I jumped in chasing the momentum. That in itself is a bit of a no-no, and I tell people, when you've got a high volatile stock, don't chase it. Wait for the pullback, wait for the entry. Now, the entry here would probably have been, still got faked out, would probably have been about, the candle makes a new high here. So this would have been a good entry. You've got a 55.30, so we'll break a $55 even as a move up. $55, so that would have been a good entry. Yes, it would have pulled back. And maybe you got stopped out, because the low here is just under $52. So $55 up at the top, at the breakout here, it moves up, and then you're at $52. So you've got a $3 move to the downside. But the spreads at this stage, the spreads are about $1.50, $2, whatever it was. So yeah, I got stopped out, A, the spreads, but also because of this flush. So I got in here, got stopped out here. I got back in for this breakout here. I got back in as it was making new highs, and then I got stopped out as it pulled back. Then I got back in again. So as I say, first loss, second loss, third loss. So I got in here. This time went in a little bit smaller, and I thought, okay, as we start getting green, I'll add to the position, scale in. So I added, as we're getting up here, break of $60, I added to the position, and then it came back and flushed down, and I got stopped out here. So this time that was the third entry, the third trade that I've taken with this particular stock, and it was frustrating to say the least, because I found myself down like $40,000 off, effectively off 3 trades. And I'm like, okay, what have I done wrong here? What have I done wrong here? This is a momentum stock. It's about to go parabolic. I can see that I just need the continuation. What was getting me was the spreads. The spreads in particular was what was getting me. But I just needed the continuation. So as it started to pull back, I looked for a last entry. I kind of top bottom of the hour. I finished my live stream. The next trade I took here was my entry. We've got a new high here, so I entered, and then I doubled down. It pulled back, and then as it moved back up, I doubled down, and then it took off. It went from where I'd entered here, kind of mid $54. And it went all the way up. I took my profit, and I actually exited the position $10 later. So I got $10 move. Had 5,000 shares in there. So the first piece I took off was got the spreads to take into consideration as well. So the first piece I took off was $60, about $6 or $7 move up. And then I got another $2 on the second half. So I found myself there. I've just made $35,000 on that move. Huge move. Just made myself $35,000. I was $45,000, well, just over $30,000, over $40,000 in the hole. I've just made over $30,000 back. If I get this right, I can be quids in. So I entered again. Next trade I lost. As you do. So I went back in, tried again, and then I made a bit back. Then I made a bit more back, and I ended up making even more back. I just scaled down. I went from trading with the red mist on this trade here, on this pop here, with up to 5,000 shares, 2,500, then 2,500, and then the same scaling out. Then we traded it a little bit later. So this carried on moving up. We've got this bull flag set up here. So nice setup. And I traded this range here. And then lovely bull flag. I was waiting for the breakout. We got the breakout, a little pullback for, okay, we broke this, got the lovely downwards breakout of the bull flag. Oh, I'm going to make, I missed you. We'll give you a pullback for the entry. So the entry there at kind of 99.50, 99.60, and I missed it. So I'm kicking myself. I'm kind of FOMO's kicking in now. I'm getting a bit angry with myself because FOMO's kicking in. And I then decided to trade it again. I went in, and I don't think what I actually did was the right thing to do, but it paid off. So as this moved up, pull back here, I got in here for the break of new highs. We've got this lovely hammer candle here. And as we broke new highs off that hammer candle, so the hammer candle is a nice bullish candle, by the way. So nice bullish candle, bullish hammer candle, and then we've got new highs here. So I entered there, and then it moved up. So I took some profits on this one, and then I added here. We got a halt, and this is the problem with this one. I was in this halt, stuck in this halt, and it resumed level, an instant flush down. Didn't have time to exit. So I'm down here and I'm thinking, I've just lost like almost $10 on this flush. And then it started to move back up. So I thought, okay, I'm just going to hold. So I held, went through all this piece, and I got out up at the top here. So I wasn't in big size at that stage. It was kind of $500. Sorry, 500 shares, and I got out at the top there. And then when I got out, it started to pull back, broke new lows there. Again, broke lows there, and then just sold off for the rest of the afternoon. Is on the short sale restrictions list, so that would have been, for me, that would have been a perfect time to short it. If it wasn't on the short sale restrictions list, I'd have been like, okay, we're now starting, but we're extremely extended. We're looking, but hey, look, shoulda, woulda, coulda. I look at this, and if I look at this now, I'm kind of still kicking myself from $38 all the way up to $135, almost $100 move in its entirety. So the best part of a $100 move, and Muggins here only ends up with $1,300 of profit to show from it. The opportunity, and I said this on the live stream, the opportunity was here, the volatility was here, the opportunity was tremendous. If I got it when I got in here around $50, when I started getting chopped out here, if I just bought and held, didn't sell, the most I would have been unrealized would have been about $15,000. I mean, about $15,000 unrealized. But I was 2,500 shares here at $55. And let's just say I'd held that all the way up to $125 and I decided to get out there. That's a $70 swing. 2,500 shares. I could have been, like I say, sat here with $170,000 in my pocket. So yes, I'm having FOMO. Yes, I'm annoyed with myself for trading this poorly. Yes, hindsight is 2020 vision, and we're all the best trader in the world. And this is why I'm not. I keep saying I'm not the best trader in the world. I'm not the best trader on the platform here that streams live. Maybe top 3, but I'm not the best day trader here, because the best trader here would have been sat here with $150,000, $160,000 in his back pocket on a move like that, and I'm sat here with $1,300 in profit. Yes, I recovered a $40,000 loss. That's a win, so I'm happy about that. But I'm just thinking, shoulda, woulda, coulda. Just by buying and holding that initial position that I bought in, if I just held it, I'd be sat here now, literally smashed the monthly goal and next month's goal besides. So look, shoulda, woulda, coulda. What am I going to do? Anyway. It is what it is, and we don't often get moves of that ink. We've had a few over the last 12 months, but I would say that's probably one of the cleanest. Scary to trade, very dangerous to trade, very risky, but the reward, big risk, big reward, as you can see from the moves up that it's had. And if you're risk averse, day trading isn't for you anyway. If And do you know what? Sometimes I'm a bit of a degenerate gambler. And I keep bringing out the poker analogies as well. And I think if I was more risk averse, I wouldn't have gone. When I was 40,000 down, I was way over my max loss. I've got a six-figure, barely a six-figure account. So I was down about 40% of my account. Normally my max loss is 10%. And I was way over max loss, and I went in again, knowing already how volatile this stock is, knowing what the spreads were like, knowing what it could do to my account. And I went in with a devil-may-care attitude, and I thought, look, it's the opportunity to make big bucks is here. And as soon as I got to the point where I was approaching break even, I cut it. And this is a classic case of emotions controlling your trading. At that stage, I should have just let it ride. I was in for 5,000 shares. I should have just let it ride and continue on up. If I go back to where we are, let's just go back to the chart here and where we actually were when I got in there. So here is where I lost the money, and here is where I got back in. So I had 5,000 shares here around $55. I should have just let that ride. I was in, just because I was in the hole, I was in a drawdown situation and I took profits here and here. And if I'd let it ride, yes, it would have moved up. I could have put my stop in there. Instead of taking profits, I could have just put a stop in there around kind of $62 or whatever. And look, 60, I've just put a horizontal in there. And like I say, hindsight's a wonderful thing. Once I got over $62, with 5,000 shares, I could have just let it ride. Put my stop in there and let it ride. And it would have come down, tapped it, wouldn't have got stopped out. I would have been happy with just that move up. Then it would have gone all the way up, and I could have just watched that all the way up. Look at that. $136 it went up to. And if I just let it ride, I would have been sat here pretty. I didn't. I kind of panicked and took profit to clear the deficit that I've found myself in. Look, I'm not a perfect trader, and that for me is a mistake as much as the initial entries were a mistake. One of the biggest, and I say this to everybody that I'm teaching when I'm talking about trading, I say this on a regular basis. One of the reasons that you're only breaking even and treading water is that you're not letting your winners ride. You're not cutting your losers early enough, and you're not letting your winners ride. Now, cutting your losers early enough, that's probably one thing I did right today, but it cost me $40,000 to do it. If I'd not cut it, I might have gone, what, $15,000, $20,000 unrealized in losses, big risk. Was I at that stage thinking that we're going to go up to $135? No. How was I supposed to know that? But once I get into that situation, instead of locking in those gains, I should have put the stop in place and let it ride. Let the market dictate when you get stopped out. That's kind of what you should be doing. If it pulls back too far, you get stopped out. Use stops. It will make you money as much as it will save you money. So, look, I'm kind of, half of me is relieved because I haven't lost $40,000. The other half of me is saying, look, you didn't make 150. So 150 up, 40,000 down. Look, we go again tomorrow. We'll try it again tomorrow, and if we get another mover like that, this time I'm going to let it ride. We'll start an hour before the market opens. We'll start at 8:30 a.m. market time. It's 1:30 p.m. here in Ireland, where I'm based. If you're based anywhere else, like in the UK, that'll also be 1:30 p.m. But anywhere else, work it out for yourself. I'm not the speaking clock. Yeah, I'll see you tomorrow, an hour before the market opens, and we'll do it all again. Take a look at how I did this. As I say, from start to finish, I did it wrong. There's some good parts to it, but this is how not to trade if you're day trading. Manage your risk, and when you've got a volatile stock like LUNR today, don't go in with big size. Don't go in with your standard size. Go in with a smaller size. Scale in if you can. If you can go in with smaller size, you're risking less, but you're able to scale in at that larger point. Always take into account the range and the spreads. And perhaps I didn't do that. And to start off with, I certainly didn't do that. But towards the end, the trades came good. So look, you check it out. You drop comments once you watch the video. You let me know what you thought, what you think of the overall trade. Was I right? Was I wrong? Was I right to cut my initial trades for the loss? The three losing trades, three losing entries. Was I right to cut them? Should I have let them ride, or was I just lucky to get the next one? You tell me. I'll look forward to reading your comments, and I'll respond to them as well. Okay. Hope to see you tomorrow, and come in the stream. Let me know your thoughts in the stream tomorrow. We'll discuss it there. In the meantime, enjoy your evening. Take it easy. So this should resume in about 30 seconds. 60.56. I went without me then. Finger of fudge. Oh, got it. Didn't cancel it beforehand. Spreads are huge. $2 now. $1, $2. See if I can't. I need to get out of this. This is very dangerous. Well, that was a risky gamble that didn't pay off. Now it's halted. Session highs, multiple session high series, etc. That kind of thing. Oh, no. You are winding me up here. That breaks lows there, I'm definitely out. This is a risky trade. This is gambling. It's my money. Don't do this, kids. Get over 56. Take the bid with it. Might be in a position to make it a little bit back. We're 58.70. Let's go halt upwards. Come on. Yeah, it stopped out there, broke me lows. So that's me done. Max loss. There's opportunity there, but it's just too volatile. The spreads are just horrible. So right now, the whole $2 spreads. The volatility $3, $3.50, $3.47 and change. So there's opportunity there. Just timing it. What robot am I using? You mean robot? I am the robot. $1.50 spreads. See this leading up nicely. A bit too big, way too big. I wanted to put another 1,000 on there, put 2.5 on instead. $60 it needs to get over 60. We're at double top right now. 61.75 is the high, the up halt. I'm underwater here. I'm gasping for air. This could be an absolute travesty of a trade. Volatility on this is huge. Over $3 on the average true range. So the opportunity to make money is there, but you've got to time it. I've just been not timing it well at all. Yeah, stop that again. Oh, it's so much slippage. That's a dang. That's a big drawdown. Lock that montage to, otherwise you're going to get yourself in a lot more trouble chasing that. Okay. There we go. Way too big. Way too big. This goes against me. I'm absolutely screwed. I'm going back down. You got a spread soon. I've got a breaker. Oh, again. Revenge trading this. That's right. 5 cents away on the ass right now. From 9 grand down. Realised. $1 up on the ass. Still in the hole. Yeah, the volume's dried up, so I'm not going to get any pretty slippage all the way now. $2 up on the ask. I'm still in the hole. That's terrible. Look at that. $2 spreads. Why am I even trading this like an idiot? Go take a bit with you. Let's move up now. 59.90. Get $3 on this. Where's my first 75 cents or whatever it is? 15 cents. 50 cents. 15. 18 cents. Keep going, keep going, keep going, keep going, keep going. Keep going. Keep going, keep going, keep going, keep going. 60.56 is the went away from the top level. Risky just holding this like this. There we go, there we go. There we go. Got the opportunity to get out. Oh, take the spreads with you. There we go. Yes! Risky, risky, risky. Oh, big risk, big reward. Ho, 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 ho. I'm not trading that no more. I'm 7k in the hole. I'm not trading that anymore. I have to though. I have to. I'm addicted. I'm a degenerate. I am a degenerate. If I trade this, I am a complete degenerate. Maybe that's a good sign. It'll come back and collect me. I'm size down though. I'm going way too big on this. I have to put it down. That's just typical. $2 spreads. I've got to get in there. Over there. $70. Yeah, $70 here. Leave it at that. Probably stronger leggings. Yeah, right. Next. Made at 92, what's that? $4, so I'm risking 2k. I'll between the spreads right now, so you think I'm okay. Probably the widest spreads I've ever traded, for sure. Right over 98. Still under the ice car between the spreads here. So low. Yeah. 96 on the best already. Handles don't reflect now. What's up on trading? $4 spreads, $2, $3, $5. Definitely the biggest spreads I've ever traded. Sure, without a shadow of a doubt. $3 spreads, right in the middle. Double bottom there, so this should go back up to about 100, 102 maybe. Should tap 99 at least. $3.80 on the average true range. That's the way risky. The spreads and the ATR are not much different. $4 on the ATR. 250 on 150 now on the spread. It's like 700 up to 98. 70, there you go. A little bit in. It's off. Shut up, dog. Like it. Spread. Oh, right in the middle of these spreads. Already up to 95 on it. Nice, let's go. Trying to get a smaller size now. For obvious reasons, I can't afford it, but B, I could probably take 5,000 shares if I wanted to. Get a flush down and drop $4 and that's 20 grand. I'll get it small. What if it's huge? Yeah, 360. I'll put a $3 trailing stop in there. If it pulls back and gets me out, then that's fine. Very close to stopping the out right now. And 471 is the last transaction, so I'm just making a break up with some of this 5 minutes. Sorry. Ah. Trying to stop 2 grand down with the spreads before there's even any price action. I'm actually going to be no movement on the answer right now. It's up 2 grand down. It's fun. It's fun, sure. Got to be prepared to take a few risks. $6 spread. $6 ATR now. $3 on the spreads. Ah, finger approach. Missed it. Go again. One again. We'll get there. Over 120. Oh, wait. 125 is the there we go. 124.20. Wait for a pullback here. We won't get one, but we'll not get one. So I've got $8 on that move, by the way. That's $6. It was an $8 move, but I got $6 because of the spreads. No, still orders not halted yet. No, it's halted. Right, okay, I just hope this gaps up as opposed to down. I've not got a halt in place. I've not got a stop in place. It's looking like it might gap up, so we'll come back in 5 minutes. Here we go. Anytime now. Ah, fuck off. I didn't even gap down, it just it resumed at the same level and then pushed. Come on, let's move up. 130 incoming. Ouch. 130 incoming. 135 on the ask. Let's have it. We'll get over 130. Next halt level up is 137, so we're way off that. Alright, let's go. $5 spreads. It is $6. ATR is over $6, so not really not give it $6, really. Rude. Maybe not, we're going to break those highs now. High of day, 128.48. We got to 128 on this candle. 129 incoming, we'll get 130. Don't know why I'm talking to myself. You're not alone. I think that's the one of the things of being a day trader, isn't it? You end up talking to yourself. That's not the direction I want to go in.
It's okay to talk to yourself, Tony. Just don't answer yourself. That's when you're crazy.
You know, answering yourself's okay as well. So you talk yourself, answer yourself. It's when you talk yourself, answer yourself, and say, "What do you say?" Afterwards, that's when you got to worry. It's not like I can. It's not exactly like I can average down either. I mean, the ask is 126. It's like pretty much where my entry is. Right. Can we get the highs this time? Up to 128 previously. Can we get 130? Looking for $2,000. There's 90 cents. Oh, 131. Testing 132 on the ask. Continuation. 132. Can we get 135? Can we get 135 on the ask? There we go. 130. And there's how you do it. 40,000 in the hole to having a green day. I'm not saying I'm the best day trader in the world, or even on the net. Top 3. that was my that was what I was adamant for today, was getting green on Luna.